Hello there, this is James and you're watching Tixee Live. And a very good morning to all of you, and all of you a very happy Thursday. In today's program, I want to discuss obviously the carnage which has happened to the market after the FOMC press conference, after Powell, as I call him, Jay Powell's press conference after the Fed interest rate decision last night, and what that means potentially for the future. As well as that, an up-and-coming other bank and its interest rate decision, which is on the horizon. But before we get into all of that, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. With that out of the way, let's get started. So, basically, as anticipated, as the market expected, okay, the Fed raised interest rates yesterday by 75 basis points, okay? It was as expected, And initially, on the back of that, and on the back of the monetary statement, which it was perceived a little bit dovish, the market got a teeny-weeny bit of a boost. That didn't last very long. That lasted all of 30 minutes because 30 minutes later, we had the press conference, okay? Jay Powell's press conference, Powell, as I call him, the inflation terminator. And in this press conference, there was a little bit of good news for the market. There was a hint in his conference that they may do a slightly smaller rate hike in December, which the market was hoping for. However, it's what he said after that which damaged the market. And I will quote him. First of all, he said, if you under-tighten, it is a year or two down the road, you realize you haven't got inflation under control. We'll stay on course until the job is done. There's some ground to cover for the target federal fund rate to reach a sufficient restrictive level that will slow inflation. The question is when to moderate the pace of increase. The question of when to moderate the pace of increases is much less important, and here's the thing, much less important than the question of how high and how long to keep monetary policy restrictive. And he went on to say, very premature to discuss when the Fed may or might pause its increases. In other words, what he said, and what this means, okay, and why the market got spooked, is yes, he did say they may do slightly smaller hikes, but they're not going to stop raising interest rates. Not going to stop. There's not going to be a pause in raising interest rates. As well as that, what he said is that the interest rates level, the level they're going to get to, is potentially higher than anticipated. Don't forget, I mentioned the other day, the likes of Barclays believe the rates will go to 5.25 before they stop. Bank of America's 5%, Goldman Sachs 5%, JP Morgan's 4.75, Morgan Stanley's 4.75. But in this press conference, basically, Powell was hinted at he might go even higher than anticipated. So we might go way above what everybody's thinking. And that is what spooked the market. No stopping and a higher rate of higher interest rate overall. So basically, that's the real major thing. This is what spooked the market. And what else is happening really is that now all the attention is going to be on the US non-farm payroll tomorrow. And of course, the US CPI due next week on the 10th of November. If potentially we get a higher non-farm payroll, then that is really going to put more fuel in the fear of the market of aggressive interest rate from the Fed. If we get a higher US CPI print next week, again, this potentially really spook the market, but believing the Fed, as they've already said, they're not going to stop. They may potentially go even higher than anticipated, is really going to spook the market. So those two events potentially can be massive. Obviously, we have the US non-farm payroll tomorrow, and I probably will do a watch along because potentially if we get a really good reading, then we could potentially see a lot of dollar strength. And the US CPI next week, don't forget last time it came in at 8.2 year on year versus 8.1 expected. Core came in at 6.6 versus 6.2 expected. So yeah, those are two major events, which again is going to, potentially really drive the bears into the market. But the knock-on effect from yesterday is obviously we've got a strong greenback again. That little bit of hope. Okay, we got the confirmation that they may do smaller increments in December, but any pause and the fact the overall target now rate may be higher than anticipated is really spooked the market. And we're going to have a look at the market in a minute. But something else is coming up, and it's someone else's turn now. Powell's had his turn. It's Bailey's turn now. That's right, Bailey, Bank of England governors, because today, Bank of England is to announce their interest rate decision. Expectation is they're going to raise interest rates by 75 basis points. This will be the biggest interest rate rise in 33 years. 33 years. Now, the Bank of England has been criticized for being too slow with increasing interest rates, as in not being aggressive enough. Okay, yes, they did 50 last time, but that was also considered quite dovish, but they've done 25. But compared to the likes of, say, the Fed, who's done 75 4 times now, Bank of Canada did a whole percentage, RBA, the Reserve Bank of Australia, were aggressive. Bank of England has been criticised for not being aggressive enough. So 75 today. Will they like to do that? That's the expectation. Like I said, it's the biggest interest rate rise in 33 years. Now, Bank of England's in a bit of a tough spot with this one, because initially, on the 31st of August, the UK government was supposed to release their fiscal plan, the new budget, which would have given the Bank of England time to look at it and think of how they're going to proceed. But that's been pushed back now to after this interest rate decision. So they're going to have to double guess what the new PM is going to do. Don't forget, a lot's changed since the last time they raised interest rates. They've got a new prime minister. They've managed to survive the drama of trust economics and the mini budget. So a lot has happened since the last decision. So they're in a tough spot with this one. But anyway, this potentially could be massive, especially for the sterling, which is currently under pressure. We'll look at in a moment. But this is due at 12 p.m. UTC. And as after that, same as Powell yesterday, Powell yesterday, Bailey is speaking at 12:30, 30 minutes after the announcement as well. But let's have a quick look and see the market. Let's start off with the sterling. I mean, look, yesterday, okay, it was holding steady around the 115 handle, actually, and on the back of that initial Fed interest rate decision and dovish thoughts about it, about maybe the 50 basis point rate hike, it spiked higher to around 115, 695. It's since, obviously, after the press conference by Powell, it came under pressure, and it's now currently trading. This is all mainly down to dollar strength and anticipation of what the Bank of England may be doing in a couple of hours' time. But like I say, currently trading now 1.12520. We're at the 112 handle. Again, this is a big amount of pressure on the sterling. So if we have a look at the daily, we can see a better picture of it maybe. Again, realistically then, the next key area for me, if this momentum with the bears continue, will be around 1.1166, potential area of interest. That's where the Fibonacci retracement level of 23.6 is. So as you can see, again, all eyes are going to be on the Bank of England in practically, say, 2 hours' time, just over 2 hours' time. Euro, same story with the euro as well, I'm afraid. Again, under horrendous pressure, spiked up on the back of that initial hope, but after the press conference, bang, under pressure again, now currently trading at 0.97550. So again, under pressure. Realistically, I'm keeping an eye on a potential area around 0.9658, potentially there. As well as that, let's look at the dollar yen. Hey, we're challenging the Bank of Japan once again. Still not above that initial trend line which we put in, but is trading slightly higher. Currently trading 148.23, so the dollar's got a bit of boost. Again, we're looking at dollar strength. And gold, of course, we look at gold as always, coming close now to that key area for me, potential key area of $1,615, currently trading at $1,622 currently. S&P 500, again, that came under horrendous pressure. We look at a 30-minute chart on that. As you can see, on the back of Powell and press conference, huge amount of pressure, currently trading at 3,747 points. So pretty much down on the day as well. So that's not looking too pretty either. So overall, if what this press conference realistically means, is that if we can maintain, if the Fed maintains this nature, this is why the market's reacting like it is, we are likely set, unless something dramatic happens, to have a strong US dollar for quite a while. So that's what's that's the mood of the market at the moment. Other events coming up, of course, obviously, is Bank of England interest rate decision. Like I said, US ISM services, PMI, US non-farm payroll tomorrow, which I will do a watch along with, and US unemployment. The market, the European equities, as they currently stand, FTSE in the red, negative 0.46%. DAX currently trading negative 0.78%. And Euro Stock 50 currently trading negative 0.77%. So there we go. What a night. What a night. As anticipated, as expected, it was all about the press conference. It was all about the press conference. And it didn't disappoint. He hasn't changed his stance. Yes, okay, we might get 50 in December, but it's not changing their overall goal. Their target is to get inflation down to 2. It's currently 8.2. So they've got a long way to go before they get there, and they are not stopping. So we are likely to get a strong US dollar for quite a while, unless something dramatic happens. Don't forget, you can ask me questions anytime you wish, or simply say hello if you like. Say hi, or share with me your opinions, what you think. Let me know what you think about it. What do you think about the Bank of England? Are you excited about the Bank of England like I am? I mean, I think potentially it could be huge, Bank of England today. I mean, that's the first time. I mean, if they do 75 today, that'd be the biggest increase, like I said, in 33 years. 33 years, the biggest interest rate hike in that time. Like I say, I think it will be 75. I'm pretty sure. I may, depending on how things go, I might do a special coverage of that one. Hi, David. How you doing, buddy? Nice to see you. Great to see you. Thank you. When you say something dramatic in regards to the US dollar, I mean, like I say, either them suddenly changing and doing a pivot and actually pausing, that would be pretty dramatic, or we get something more, a little bit more aggressive in Europe and the UK. That could potentially change it if they change stance. Something like that. That's what I mean by something dramatic, like a complete change in direction. Or like I say, in other words, if we suddenly see a real big slowdown in the US labor market, that could change the current market sentiment as well. If the US CPI next week, which I'm not expecting to do, if the US CPI comes in lower or a lot lower than anticipated, that's dramatic. That could change, of course, but I'm not expecting a massive change in the CPI. But a brilliant question, David. Thank you. Really good question. Hi, James. I think BOE should do 75. I think they are going to do 75. I think that's the general consensus. There was hope. There was a little bit of hope earlier on, a couple of weeks back, when all the drama was going on with trust economics, that they might do 100, but they Bank of England simply said, calm down. We ain't going to do 100. We're going to do, we're not going to be that aggressive. But you never know. They could surprise us. I doubt it. Be good if they do. They need to get back control system mess from trust, and hopefully they can with a new PM. Well, yeah, they are. I mean, the new PM has put a little bit of stability to the market, because he seems to be a little bit more, more grounded, so to speak, more grounded. So he has brought stability to it. The other good thing about it is obviously the UK government is actually working quite closely with the Bank of England. Jeremy Hunt, actually, the Chancellor of the Exchequer, he met with the Bank of England Governor Bailey a couple of weeks ago to discuss a couple of things, and basically said they're working together. I mean, the government has chucked them a bit of a curveball, to be fair, by pushing their budget back. They're supposed to release it a couple of days before their decision. So they've done a bit of a curveball against them there. But in general, they are working quite closely together, which is quite encouraging. But yeah, hopefully the PM's done a reasonable job at the moment of calming, but there's a lot of stuff for him to do. And a lot of stuff for the Bank of England to do, because the UK are practically in recession now anyway. So we pretty much know that for certain. But great question. Yeah, so like I say, these are all the big things coming up. So we'll have to see. Don't forget, if you think of a question later, you can put it in the comment section, either on YouTube or Facebook. I will see them, and I will reply to them next time I go live on air, which of course, like I say, I might do a special on the Bank of England. I might do if I can. But if I can, I'll be definitely going live again around 2 p.m. UTC to do the obviously to do the US session. So please come and join me for that. Anywho, if there is no further questions, shout out to David, LD David. Thank you for the question and saying hi. And hello, SMS 790 again. Thanks as always for your interaction as well. I really appreciate it. Like I always say, if you're watching me on Facebook and you enjoyed this little video, by all means, give us a follow. If you're watching me on YouTube and you've enjoyed this little video, subscribe if you like. Hit the notification button so you know next time when I'm going live. If you enjoyed this video, find it interesting and useful, and you put up with me, my over-the-top enthusiasm for the markets, I simply cannot help, then give me one of these. It's nice to know that you like what I do, which I can see I've got a couple of likes already, which I really appreciate. Anyway, till next time, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.